I think we're headed into a downturn. It's long overdue. It's going to be painful. I'm not happy about that, but it is what it is. The third mandate has always been healthy and continuously operating financial markets. And we know that when that is threatened, like in the March 2020 example, the 10-year went no bid. And they can't have that. In 2008, the banking system almost melted down and the ATMs weren't going to work. They couldn't have that. And so if we get to that point, I'm not sure we will get how close we'll get to that, but we could. If we get to that point, we know one thing's for certain. They will do what Neil Kashkari said. Is, at some point they've been fighting inflation. They have not solved it, but they're going to declare victory, even they don't really have it. And they're going to say, gosh, unemployment's really, the Somme rule has been violated. Unemployment's going up quickly. We need to address stimulus and get things going. And Trump is going to get his wish. They're going to cut rates, and they're going to start slowly. When that's not enough, they're going to get more aggressive. When that's not enough, they're going to do QE. QE is printing money, and there's nothing that likes printing money more than Bitcoin. Right? I mean, they do that. And so I think we're still in a 4-year cycle. And I think 140 is the next stop.
The Federal Reserve is struggling against inflation. And despite 2 years of aggressive rate hikes, prices remain high, growth is slowing, and unemployment is rising. History shows what happens next. The Fed will eventually fold, declare premature victory, and shift to rate cuts. When that fails, they'll turn to the only tool left, the printing press. Quantitative easing will return, flooding markets with cheap liquidity and eroding trust in fiat currencies. Larry Lepard has witnessed this before. The Fed's response will be slow at first, then increasingly desperate as recessionary pressures mount. Rate cuts will come, followed by deeper cuts, and ultimately a flood of new money. When that happens, Bitcoin, hard-capped, decentralized, and resistant to monetary debasement, will thrive. This isn't optimism, it's inevitability. The 4-year cycle holds. The Fed's errors are already set, and 140,000 is just the minimum target for Bitcoin. The only question is whether investors will recognize the signs before the storm hits. Check out clips from Larry Lepard's explosive interview for more insights. And don't forget to like, subscribe, and enable notifications for more in-depth content. Enjoy the video.
Another thing I think we should point out, in case people haven't had the time to listen to it, was that Treasury Secretary Bessent had an interview with Tucker Carlson a couple days ago, and he said, Bitcoin is emerging as digital gold, a store of value, right? This is the U.S. Treasury Secretary. Can anyone imagine Janet Yellen saying something like that?
No.
It was stunning, right? And he's a gold bug, so but he's recognizing that Bitcoin's emerging, right? And he's right. Some people may not want to hear this, but and I'm very, very supportive of everything they're doing. I mean, Doge is a great thing. Sadly, doing the tariffs and putting America first, I think is a great thing. But I think even Bessent and Trump aren't fully aware of, as a market watcher, what I perceive to be a process that's going to be painful and we're not done with yet. You can't solve the problems. I mean, we built these problems up over 50 years, Dante, right? I mean, we can't solve them in a weekend. We can't solve them in a week, a month, a year, maybe even one presidential term. I mean, I hope we can get things well established in the right direction by the end of this term. But I guess the point is, this market reminds me a little bit of '87, where you had a very bad fall into the weekend. And I think there's a decent chance on Monday and Tuesday, if the Fed doesn't come out and say something dovish, that we're going to crash, early next week. We may not. It's hard to say. I mean, maybe the selling is done, but the point is that Trump clearly did something extremely disruptive with these tariffs. The market reacted in a way that said, you know what, the world is going to look different, and these stocks are overvalued. We need to take them down substantially, and that process may not be done. And I want to just caution all Bitcoiners to understand that just because we had 1 day of non-correlation, that does not mean that, in a full-out market collapse, let's just hypothetically say that the market goes down another 10, 15, 20% next week. Not saying it will, but it could. And I think in that case, that would make it look very much like March of 2020 or September of 2008, where you get to a correlation of 1. And what that means is that everything will go down. People will sell. There'll be somebody who's leveraged that owns Bitcoin, and Bitcoin will be the easiest thing to sell, so they'll sell it. And by the way, Bitcoin and gold will emerge as the life rafts because they're the thing that can't be debased. And if what I'm talking about occurs, as my book laid out so clearly, and as everyone listening to this knows, the Fed will have to respond with massive monetary stimulus. They'll have to go quicker, harder, bigger than they did last time. And so that will be the big print. I mean, we've had two big prints, '08 and 2020, but this one will be even bigger. And when that, there's nothing that fuels the growth in the underlying base money that's sound, which is Bitcoin, and the older base money, which is close to being as sound, which is gold, as monetary debasement. And we're talking massive monetary debasement if, and it's only an if, and I'd say it's maybe 50-50, the market goes down the way I'm describing.
I mean, take us back a little bit to December or October of '87. What do they call that? Black Monday?
I think it's Black Monday or Tuesday. Yeah, I mean, I was in the markets then. I was fairly young. I entered the world in '83, so I was only 4 years into my career. But I was managing a fund or money, and I had my own personal money. And you could tell the markets were very overbought and very, very vulnerable. And they started doing some things with the dollar. The Treasury Secretary made some comments about the dollar, and that's what triggered that whole meltdown. And at the same time, that something had evolved at that time, something called portfolio insurance. I don't know if people have heard of this, but what it was it was really just a giant stop loss on the market. And so the whole notion that they were selling equity investors is we will sell you insurance below the market, and we will automatically stop your loss if the market goes down. So you participate in the upside, and if there's downside, you'll get capped out where you won't lose very much. And the assumption behind that whole model was that there would never be a discontinuous market. So that, in other words, everyone would get to sell 4% down, right? But what happened is the market jumped over the 4%.
Yeah.
And then all the sell orders got triggered, and 4% became 22%, right? And so, we don't have that exact same setup today, but there are a lot of derivatives today. And, I mean, I'm guessing there's some people who are reading the newspapers this weekend, the average investor, they're looking at their retirement account, they're calling their financial advisor, they're saying, hey, we kind of took a hit last week. What should I do? And if a quorum of them comes in on Monday and says sell, it could look similar.
Markets are on the edge, reminiscent of 1987, and stocks could experience a sharp crash next week, pulling Bitcoin down in a liquidity panic. The Fed will eventually respond with massive money printing, but not before the pain is felt. Even treasury bonds or digital gold won't shield crypto from short-term turmoil. However, once the stimulus flows, Bitcoin will break free, rising as fiat currencies crumble. Brace for volatility. The system is unraveling, and the rebound will be ugly but profitable. Markets are realizing the harsh truth. The era of easy money is over. Trump's tariffs hit as expected, catching complacent investors off guard. Stocks are headed for a tough reckoning as wealth effects reverse, triggering the recession the Fed feared. As liquidity tightens, even Bitcoin won't be immune to the initial fallout. But here's the twist. The impending market meltdown will force the Fed to unleash extreme monetary measures, sparking the real crypto bull run. First the pain, then the payoff. Let's dive into more clips from the interview for further insights.
What's crazy about this whole thing is they forecasted this tariff day on April 2nd back in February. Everybody knew the date it was coming, and it's crazy. When it happened and they did what they said they were going to do, the market sells off. And I think it's like, was the algorithm tuned to say, yeah, politicians say this, but then they do the opposite? It was so fascinating to see.
I found that exact same thing fascinating. I think two things. I think one, it was a bullish mindset. Just we've had so much, the markets only go up, and everyone knows that doing what they're talking about would be very bad for the market, so they won't do it. They can't do it. He's just bluffing. This is just the art of the deal with Trump. And I always kind of took the other side of that. I thought to myself, no, if he wants to, I mean, the system is broken, and the system needs to be fixed. And if you want to fix it, you might have to break some glass to do it. And my sense was, he's a gutsy guy, and he's not afraid to break glass. I mean, look at how he's behaved politically. He's taken many stances that I know most people didn't think he could beat Hillary, and he did. And so, kudos to him for sticking by his guns. And even today, and this is probably why if the market doesn't crash next week, I think there'll be a lot of talk that, well, he's still going to back off, that these tariffs aren't real. And there's some interesting things in there. I mean, I don't want to go into it in great detail, but the whole way they calculated the tariffs and they messaged it. I mean,
with the boards and
with the boards and the tariffs are equal to the trade deficit that they've been running, and that's what they've been charging us. So we're going to charge half of that to them. I mean, there's some real political salesmanship, I should say, involved in that. And so be it. That's the way the game is played, right?
What do you see the rest of the year looking like in terms of Bitcoin, in terms of the market in general?
Yeah. So I've always said, don't trust me for market predictions because nobody ever gets them right. I can't get them right. Anyone who tells you they can is lying. But a general trend I feel comfortable with. I think that the stock market has seen its peak. I feel extremely comfortable with that. I think that based on all of the free money that boosted the stock market and created the everything bubble, that there's a very high probability that at the end of this calendar year, the stock market is substantially lower than it is now. The stock market has been the economy. The top 10% account for 50% of the spending. The top 10% own 84% of the stocks. When you take 20 or 30% off the top 10%'s retirement portfolio, guess what? They stop spending money. Yeah. They don't take trips, they don't use hotels, they don't use airplanes, they don't buy cars. They just cut back because they don't have as much money to spend. And so that leads to a recession, which then becomes reflexive because, we buy less cars, then the factory worker who makes cars gets laid off. And so I think we're headed into a downturn. It's long overdue. It's going to be painful. I'm not happy about that, but it is what it is. The third mandate has always been healthy and continuously operating financial markets. And we know that when that is threatened, like in the March 2020 example, the 10-year went no bid, and they can't have that. In 2008, the banking system almost melted down, and the ATMs weren't going to work. They couldn't have that, and so if we get to that point, I'm not sure we will get how close we'll get to that, but we could. If we get to that point, we know one thing's for certain: they will do what Neil Kashkari says. There's an infinite amount of cash in the Federal Reserve, because they'll just run the printer. They've got Doge and the deregulation policies are trying to make everything more efficient, but that takes time. And in turn, on the other side of the monetary side, they're trying to get conditions looser. And some have arguably said they wanted to croak the stock market to help the bond market, and maybe that's true. I mean, I think there's a grain of truth in that. And Besant himself pointed out that the stocks are owned. I mean, a lot of the people who voted for Trump don't own stocks. Yeah. The bottom half of the country, they don't own stocks. Yeah. So they're not looking at their 401ks. They don't have them. Yeah. They're like, and to them, it's like, well, some rich guys lost some money. Too bad. I hope you don't bail them out again like you did in '08.
The crypto market has lost an astounding $1.3 trillion in value. And as Larry points out, traders are bracing for more volatility with the possibility of further declines or even a full market crash. However, there are signs of hope for a recovery. Analysts suggest that a shift in the political landscape or emergency action from the Federal Reserve could provide the spark needed for Bitcoin to bounce back. The recent rise in expectations that the Fed will cut interest rates to combat a potential recession could flood the market with liquidity, pushing Bitcoin and other cryptocurrencies higher. As Bitcoin tests key support levels around $79,000 to $80,000, it's clear that uncertainty looms. The price has already dropped below these crucial levels, with the next major support zone around 72,000, leaving room for further declines. Investors must stay cautious and watch closely for signs that the Fed will intervene to ease market pressures, which could restore confidence in digital assets. As we wrap up, how should investors prepare for the potential short-term pain that could hit Bitcoin and other assets? Let us know your thoughts in the comments below. Don't forget to share this video, hit the like button, and subscribe for more updates. Thanks for watching.